So last month there was an article by JP Morgan Research titled "There Will Be Blood." They literally raised the recession probability to 60%, up from 40%. Fun fact for y'all, it's my favorite movie, by the way. Side point. Recession's in the news, everyone's fearful about it, everyone's stresses are just maxed out right now. We're gonna talk about that today because we wanna discuss what is a recession and should you be concerned. Today on Mindset with Brad Barrett, let's go. Welcome in everybody to Mindset. I am Brad Barrett, this is producer Jared and the lovely Kira. Today we're gonna be talking to you about a recession. Look, there's a lot of fear going on with this. Likely you've heard this in the news lately.
The mood on Main Street is getting darker and darker.
90% chance of a recession. That is the prediction tonight.
Recession odds have skyrocketed since the beginning of the year.
These are historically weak numbers.
Pushing the U.S. economy to the brink of full-blown crisis.
We're gonna talk about what is a recession, why should you care, and honestly, how should you be managing your money or your investments around a recession? Because I'm gonna tell you loud and clear here. There is a lot of indicators or signals that will show us as economists whether we are heading to a recession or are in a recession. Now, I'm going to talk to you about that because I'm going to be candid with you. What you're hearing in the news is likely not exactly what's going on. And more importantly, I think it's driving more fear than it really needs to be.
I'm so scared right now.
So we're going to talk about that today on the show because I think it's really important for you to understand how this relates to your portfolio. And hopefully have some fun with it. You guys all know what a recession is, if I were to ask you?
It's part of the economic cycle.
Ooh, fancy.
Hard times.
It's associated with bad.
Not good, right?
Not good stuff.
Okay, I'm gonna read the definition of this. A recession is a sustained period of economic decline characterized by a significant decrease in economic activity. Wordy, right? Now,
A little bit.
what you guys all know, I'm gonna come out right out of the gate. What we all know is like, okay, recession is coming, is there's one indicator that the news uses all the time. I've seen it for 20 years. I've had clients ask me about this. It is 2 consecutive quarters of negative GDP. Now, GDP is gross domestic production, basically what we're putting out into the world from the United States perspective. And 2 quarters is 6 months. So when we have 2 consecutive, it's all of a sudden, oh my gosh, we're in a recession. I got blank stares the entire, I feel like in this episode I'm gonna have blank stares the entire day. Am I somewhat accurate in this?
Yeah.
Okay. All right.
No, I mean, I think when you're talking about like recessions and all that, I'll admit I don't know what it truly is, and I know it's just fear of okay, hold on to your money, don't spend, and jobs are down.
A great way to look at a recession is like a traffic light signal. Green is good, you can go. Green is productive, we're moving along, things are positive, right? A recession is the yellow light. It's not the red, it's the yellow.
Gotcha.
So like first and foremost, it's a normal economic cycle. It's not like you have to like, it's the end all be all and things are gonna go, to hell in a handbasket here, right? This is really important to understand. It's a natural part of the economic cycle, okay? So I think it's important to look at it from like a yellow slowdown perspective. So I'm gonna give you 6 indicators of whether or not a recession is happening. And there's 2 camps to this. There's a primary and a secondary. Not to say that there's less or more importance there per se, but it's more about, hey, if these first 3 are kind of hitting off, then there's something going on.
So exciting.
I can see the excitement in your face.
It is exciting. I'm excited for this reason.
Why?
Not to like sit here and listen to all this and get all this, but I mean, this is pretty big. I get very anxious, and I think a lot of people get very anxious when they start hearing recession over and over and over. And if you, with this information, I can be like, well, no, we're not. Or, yeah, we are. When you're more informed, that anxiety goes away.
I totally agree.
Don't you need recessions?
Need is a strong word. I think it's a very normal economic cycle. Like, I always relate it to anything else we're normally used to, right? So imagine, in your personal life, whether it's whatever thing you're doing, right? Has it always been an incredible season of your life? Has it always been super highs, 0 lows? And I would argue then at that point, in the lows, do you not feel like more of your growth happens in the lows, right? You learn some things. You were probably different than you were 5 years ago.
Well, you can put cello music behind that. Inspirational.
No, I was inspired.
It's not, I'm glad to inspire, but we want to make something as nerdy as this relatable, right? Where it's like, it's not that it's needed, but it's definitely the kind of, I call it, it's like a God cycle, right?
Yeah, it's like part of the game.
It's part of the game. Like, exactly, it's part of the game. That's basically how we look at it. And, of these primary indicators we're talking about, the one that kind of sits above these 6 is that one I mentioned earlier, which is the 2 consecutive down quarters of gross domestic production. That means something's going on. Then you go into the primary, and the first one they look at is average hourly earnings growth. If you have growth of 4%, it creates concern of wage inflation. If there's wage inflation going on that's greater than about 4%, there's a wage inflation issue, which people are then getting paid more. They have more money to spend, and therefore it continues the problem of too much money chasing after too few of goods.
Can I get a definition of wage inflation?
Did I not do a good enough job there?
I think
for
you did. I'm pretty much getting it.
Okay.
I'm a big definitions guy, so it helps to kind of
I dig it.
set that.
While we're looking that up, just to be clear, that first indicator right now, May of 2025, that is not hitting that number. So that's number one.
Happy times.
Happy times.
Yeah, all right.
Well, how far off was I on the definition of wage inflation?
Well, this one always just sounds a little more
Wordy?
Studious.
I'm not.
Word of the day.
I'm not studious.
I mean,
I'm far from it.
No,
Go
I'm just
ahead.
kidding. Wage inflation, also known as wage push inflation, refers to a rise in wages that leads to an increase in the cost of producing goods and services, ultimately causing businesses to raise prices.
So they pay their people more, so they have to charge their customers more.
Essentially, it's all a flow.
Okay.
Right now, not happening. The second one is a leading economic indicators growth. I always get that one wrong. LEIs. So growth in LEIs peaks and turns negative before recession. That's always kind of been the case. So there's indicators.
Yeah, I'm lost. Is this a 1 to 10 thing?
I'm looking at Jared like, what are you talking about? LEIs are indicators in the economy that are leading, the National Bureau of Economic Research to say, hey, look, there's some things going on here. And that's kind of more of a generic term. There's a lot of different ones.
Okay. So that's an umbrella term
It kind
that
of is,
has
yeah.
some
More of an
individual
umbrella.
things.
It's called LEIs.
Okay, gotcha.
That happened. That has happened. So some things going on inside there that are showing that. The third primary one is the yield curve. So this is where the 10-year and the 2-year come in. Remember our 10-year
The
conversation?
10-year note.
The 10-year note from last week or 2 weeks ago? Remember that was?
I don't know what the 10-year note is. Is that something people all people should know?
We need to talk off camera.
Probably.
Okay.
Yeah, a note from the bank.
I see you guys learned a lot. This is good. So okay, inversion, and all that means is short term versus long term in the money line, right? Inversion preceded each of the last 6 recessions. So the last 6 recessions, there was a 10-year inversion, and an inversion just basically means that short term money is paying more than long term money. So think about this conceptually. All right, if you were to put your money away for 10 years, wouldn't you expect, just general logic, wouldn't you expect you'd make more money saying, hey, I'm going to give somebody, a bank, for example, or an institution, investment, I'm going to give it to them for 10 years. I should be able to get paid more than if I only gave it to them for 2 years.
Yes.
Yeah.
Okay, so this is what's key about this one, that has, for the last 6 recessions, inverted before a recession has happened. That has not happened yet.
Okay.
So of the first 3 primary, only one of which has, one of the signals has hit.
Okay, so
Good with those?
only one of the 3 are hitting.
As of right now,
I feel good.
feeling good.
Anxiety's
By the way,
coming down.
a little bit, good. A little cortisol levels are shooting down.
Yeah.
So, okay, we're gonna talk about secondary indicators. And the first one they look at is unemployment, okay? Here's a note we wrote down. Recession signals when 3-month moving average of unemployment rises 0.5% or more in the previous 12 months. Right now, that is also not hit. Unemployment, currently, the 3-month moving average of unemployment has not risen above 0.5% in the last 12 months, which means people are employed.
It's good.
So we're not having a production issue if people are employed. You typically would see unemployment go off if you have production issues saying, hey, we're not producing enough, we don't need you.
Now,
Right?
with all the
that
tariffs
makes
in the news and things like that, could this possibly affect
Absolutely.
that actually production moving forward if all
Absolutely.
these go?
Absolutely. So this is why, and again, here's one shred of truth and fact that's going on. The news is talking about this because tariffs can absolutely create trade wars. And trade wars it can be stifling to production, even to consumption at that point, right? So yes, this is why it's being talked about. All right, the 5th one, corporate profits growth. This one should be pretty easy if I don't have to describe it. Companies, their profits, what they make, and if it's growing.
Yeah, I got this one.
We got
Right.
this one. We good here.
That one made sense.
All right, that one I saw Kira light up on that one. I'm
Woo.
like, I get these
I got
words.
this
These
one.
words I
Yeah.
understand on this one. But they look at year-over-year growth. So we're not looking at like yesterday or last month or last quarter. It's year-over-year growth. And here's the fun fact about this one. This is always, not in the last 6, always. Every recession we have had in the United States, This one has always turned negative before a recession. Interesting.
Is it negative right now?
It is not.
Oh.
It is not.
Happy times.
Happy times. Last one is consumer confidence.
I
That one makes some
know
sense?
that one.
All right.
And this is something
You're a consumer, I'm a consumer, you're a consumer, you are all a consumer.
and we can speak to this one because
Yeah.
I feel like in communities, my communities, consumer confidence is not super high, but not also terrible. Like I will say, I mean, with inflation, things like that, and with everything in the news, I'm not super confident to go buy certain larger things.
Well, it's
currently.
funny you say that, because guess what? This one has pinged off.
Oh.
So what you're feeling, and this is, by the way, consumer, noted.
Check.
So a sentiment or a feeling, we're a part of this economy.
Yeah.
The three of us in this room, all of you watching, we're a part of this economy. So consumers, all of us, are confident. And the definition for them is future expectation versus present situation. So presently, every day you get up, we're kind of fine, we know what's going on, we're living our life, doing our thing, but it's the mindset of the future expectation, that's the confidence level. That's where it's going on. And it turns negative and kind of troughs out through a recession, not before, through a recession. That's kind of a key one. So this one you will likely see kind of go through as it's happening along the way.
So we got 6 wonderful indicators,
Ooh, wonderful.
and we got 2 hitting, 4 not.
Correct.
Is that
Currently.
accurate?
Yep.
Currently. Okay.
Now remember, these things all just don't happen at once, and it takes some time to filter in, right? You got some of these indicators that are using 12-month rolling data. You got some that are using 3-month within the last 12 months. Like there's different subsets of the data sets that are in there. So like you're gonna have this roll, and then sometimes when another one pings, the other one comes back. So, and we saw that a couple years ago.
Ebbs and flows.
It ebbs and flows.
Well, I mean, this helps because as we're talking about this and listening to you, I think for me personally, and I can't speak for anybody else, but like in my mind about a recession, it is exactly that. Like one day we're going to wake up, everything's down, we're in a recession. It's almost like when they call that recession,
Yeah.
it almost feels like everything's going to tank. More like a crash or something like that. In my mind, that you almost equate the two. And
That's why I brought it up, because historically speaking, it's always been like you've already gone through it.
yeah.
You know what I mean? Like it's already been happening.
So you'll probably have already adjusted your finances for
Typically.
the situation. It's just, okay.
And so that kind of is a perfect transition into, okay, so we're living through it, right? But what can we be doing if we are heading there? If we are heading there, right? Number one is minding your overhead, right? Making sure you're not getting out over your skis, right? Making sure you're not, if there's a potential for a loss of a job or job security is a little sus.
Sus.
My 9-year-old's starting to say it's sus.
So cool.
I learned what that was the other day. It's short for suspect, which is also slang for not good, whatever.
Oh, I thought it was short for suspicious.
Oh, is it?
I don't know. I would trust the 9-year-old on that one.
I don't know. Yeah, suspicious. If your job security isn't secure,
Sure.
yeah, be careful. That's number one. And by the way, that's true of good times and bad times. You should always watch your overhead in terms of what you got coming in versus what you got going out. Second part is managing your debt. Right now, during this kind of stuff, if you got some debt going into this time period, right, and you do have job security, and you do have some savings, like you got to talk with an advisor to make sure you're kind of working through what I call the arbitrage game, right? It's like, hey, if you got double-digit interest rates, but your investing life is in the 6, 7, and 8s, which is, by the way, good, you're losing yourself some money. So during a tumultuous period, you may want to utilize some of that to help pay some of that off. And then if you go through that, you get into the investing side of things. Number one is if you have a plan, if you have an asset allocated portfolio, look to stay the course. I call it actively waiting. Am I saying to do nothing and sit on your hands? No. I'm saying be active with it and talk with your advisor about how you have your investment set up, how you have what you want to be doing, still going through. Again, as I said before, it's a lot of what you don't do in the investing side during volatility or maybe even during a recession that matters more than what you do.
So I guess the key takeaway I'm hearing is because it's not a full-on crash off the cliff, it's more of a decline or declined plane.
Mm-hmm.
You're going to be able to react. It's not like you're going to lose everything. You're going to be able to kind of make adjustments to carry you through.
Yeah.
So really, when you hear about recession, you shouldn't have the anxiety that I think so much of us have, because you're going to be able to make changes. You're going to be able to kind of adjust to see it through.
Well said. And by the way,
I was like, did I get it wrong?
No. I was processing it. And to put a bow on today, right now, the 6 indicators I just mentioned, only 2 of them are actually showing. It means there's 4 that haven't. Remember, for context here, a couple of years ago, the early part of 23, there was 5 of these 6 indicators that were actually showing red and showing signals of what's happening, and we still didn't go into a recession. So just, I guess, keep that in mind for everybody as we talk about your stress, your anxiety. Just kind of go through it, be mindful of some things, talk with your advisor about what of the things we might have mentioned today you can be doing. Even some of the things I mentioned outside of your investments, just your overall cash flow, any debt management, right? Because if it does happen, you likely are living through it right now. That's what I'm trying to say, okay? But I think, again, the news kind of tells us it's a little bit worse off and it's happening tomorrow than it is.
That's what it said on the news. And the news never lies.
Be careful with that. I just want to kind of come to you this week and just kind of speak to somebody out there. Hopefully it touches your heart a little bit to kind of just lower the cortisol. And more importantly, if you are concerned about it, go talk with an advisor. If you don't have one, give us a call or give someone trusted you can call. I hope you enjoyed that today. We did. I know Kira did. We had some fun. As always, hey, thank you for our subscribers and our viewers. We really appreciate it. If you haven't subscribed, please click the subscribe button. We'd love to have you on for next week. Next week we're talking about
how to talk to your kids about money.
Ooh.
It's needed.
Oh, it's needed. All the parents out there. It's going to be a good one. I think it's a little bit of a taboo subject. There's some
sneak preview. There's surveys that show that most parents would rather talk to their kids about sex, a very uncomfortable subject, than money.
Wild.
Yeah, it's crazy.
Okay, we're going to talk about that till next week. But hey, as always, if you lead with love, everything's going to be okay. We'll see you guys next week.